morning, thanks for tuning in. Welcome to Eightcap's Trade Zone Asian Session Update. My name is Joseph. So today marks the first day of the new trading week and also the first day of the new trading month, which is August. We're going to start quickly with last week, some of the key things. So the core PCE price index came in at 0.6% higher. That was slightly higher than the expected. Today we've got a bank holiday for the Swiss Central Bank, and we will have a quick look forward at some of the key news coming up this week. Obviously, we have the non-farm payrolls coming up at the end of the week, but there is a bit of a busy week. We have the RBA rates on Tuesday. Rates are expected to jump up to 1.85%. I think the real expectations now will be on how many more or do the RBA have left at this level, and traders will be looking at the statement to see if we are going to see some hints that is there an end date coming in sight with some of these very chunky rate rises that we're seeing at the moment. Now also we have the Bank of England meeting this week as well. Rates are expected to increase to 1.75%, and US employment to end the week. So quite a busy week coming up. 2 rate rises are expected to come up this week. So we just want to touch on quickly on last week. So obviously with the core PCE price index increasing, inflation still around, but we did see a very nice strong rally last week after the Fed met and increased rates. I think one of the hints there was the possibility that could the rate cycle slow, or could we see the rate cycle start to maybe even be paused, but I won't say paused just yet, but definitely possibly slow down by some of the comments that came out. Now risk markets really took to this statement, and we saw some very strong moves higher. We're looking at the US 30 at the moment, but it wasn't just over the US 30. We saw some of these strong moves higher was across the boards, from FX, gold to cryptocurrencies, and it did mark a real solid momentum shift mid last week. And just looking here at gold, we can see that reaction from gold, and we can see the reaction on some of the stock indices. So the German 30 for instance, and the Nasdaq here. So that was that big shift here we're talking about. Now there was a bit of talk that could have been just a one-day reaction, but follow-up rallies are starting to suggest a slightly different picture. The Nasdaq's back at resistance now. So just capping off on Friday's session, we saw the Dow add close to 1%, the S&P added 1.42%, the Nasdaq added 1.88%, and the European market, especially the DAX, have been a bit not lackluster, but they've definitely been struggling with a lot of the pressure that's becoming apparent on not only the EU but the top economy of the EU, which is Germany, with recession fears. And recession fears are also being discussed before the Fed meeting last week in the US. But so far, so good. We're seeing some strong return to buyer strength, and the DAX added 1.52% and the FTSE added 1.06%. So it is an interesting reaction. We are seeing an interesting lead up as well, and it will be interesting to see after the Bank of England and the RBA this week how markets take to whatever comes out in the statement. So we just have a look at the ASX here. We can see this very strong rally. It got very close to retesting that 70-30 point. It's at levels not seen for a fair period of time before we saw that real strong sell-off. So we've had a higher low, we've had a resistance breakout, and then we've had another fast higher low, and then this fast trend up. So there is a lot of pressure on downtrends now. We can see that the ASX has broken through that downtrend and is on a good uptrend. But I think the key here will to see when we have our next decent pullback. It is not parabolic, but getting close to it, and we would like to see what happens on that next pullback, just to show an indication of buyer strength and buyer momentum and interest, and if we will see that next leg push to a leg higher, signifying that an uptrend is well and truly underway. Why I'm being so a bit vague and trying not to be skeptical is that you do see strong counter rallies in bear markets. It is quite a common occurrence, and they do like to have a real sharp move up, and that can quickly be pushed down very hard. There's a really good example of this if you look back at the Nasdaq and in the tech crash, you'll see the real strong counter rally type pattern I'm talking about that can occur in markets when they do break. But I'm definitely not saying that's the situation here, but that's why I'm saying we do want to see that first pullback, that new higher low, and then that new push higher, just to show that yes, there is a trend starting to get underway. Now, this pattern is quite similar across a lot of the key stock indices at the moment. You can see here on the S&P. We can see on the Nasdaq it's not as strong, and then we can see on the Dow and on the German 30. So now, just before we continue on, the Chinese economy continues to be watched. There is worries about its strength at the moment, the amount of debt that is in the housing market. We also saw the Evergrande situation. So there is still a lot of talk out there at the moment about how is the Chinese economy, I won't say crashing, but is it, weakening dramatically? We saw some data come out at the end of the week about factory contracts contracted unexpectedly. So there is a bit of talk about that at the start of this week, and it continues around the health of the Chinese economy. So how much of an impact that's going to have right now, not really sure. I think the markets are really preoccupied at the moment with inflation, and we'll be continuing to look at the rate decisions that come out this week for the ASX and the Bank of England, and just continuing on around interest rates and inflation. So we're going to just keep going now. Just quickly on the stocks, Tom Lee was on CNBC this morning. He was saying that the bear market could be over for 2022, and markets may continue to push higher. You can't really argue with that. Some of the markets we've been looking at this morning, we can see breaks of some of those downtrends, and we are seeing pretty healthy patterns with buying. So it'll be interesting to see if we do get that pullback, and then markets do continue to hit new higher highs after breaking uptrends. So off to look at some of the FX today. So Friday was a bit of an interesting session. Let's pull up the Aussie, for instance. So after that price index data came out, we did end up with a bit of a choppy session. We are seeing some gains this morning. The USD index is higher at this stage, very early in the week. On Sunday over there, and we are seeing gains from the dollar to the CAD, and we are seeing some small gains from risk currencies at the moment as well. Early before into the Asian session, we were seeing gains to the end, but that has been turned around now, and we are seeing red from the risk and from the majors to the Japanese yen. Gold has been mainly tracking lower this morning. We are seeing this comes off the back of those very strong 3 days of rallies, and oil. We saw a pretty sharp pullback on oil on Friday. It did look like it was trying to get another move going, but for now it's remaining pretty hemmed in this consolidation pattern here, and just the top of that pattern is just at the top here, and we are really at the end of it now, so it's starting to be squeezed. Excuse me. So we'll be looking to see which direction next buyers or sellers are going to take, and if we do see another test higher breaking out, or if we do see some weakness coming, if we possibly do see a move back to this key support, which is down at 95.30 to 95.40. Now we're just going to finish on cryptos at the moment. Cryptos were looking pretty good last week, but we did see a bit of a flat finish. You can see those two rallies here. The weekend was pretty flat, not a lot of movement, and we are seeing some weakness this morning. So the Bitcoin's down close to 2%, Ethereum's down 2.27%. Majority of the top 10 are in that 1 to 2.5% in the negative, and we just have a quick look down at the top 25. So the top 25, as we can see, some selling today. Is a pretty flat session over the weekend. But as we were discussing, this is this area here. We'll just put a line in there. So this is the key area that we raised on our crypto review on Friday. We really want to see what happens if price has already tested this area, and we're starting to see some resistance already. So I was sort of looking at this band here is pretty key supply. We wanted to see if we can get a move into there and a break. So the break primarily would want to see firstly would be this point of resistance here, and then if buyers could keep going, then a break at this level here. So that's the area we're sort of worried about, that's going to potentially continue to push back on demand and any type of rallies, and that's a pretty chunky looking supply area at this stage. And that's, we do have this nice trend here, and we are seeing new highs and high highs, but this is the issue for us right now, this area here. So a clean break above that, for sure, anything could be on, but until we do that, are we going to see some chop or a new consolidation develop, or could we see a new test from sellers to see how much resolve is actually in this rally at the moment? So that's we'll wrap it up here. So we do appreciate tuning in, and we do thank you for your time this morning. Stay up to date with the other updates coming out through the week for the week ahead, and please stay up to date for our latest analysis that will also be coming out during the week. Again, thanks for your time, and just remember tomorrow's RBA rates decision and statement, and then the Bank of England later in the week, and Friday's NFP. So have a fantastic trading week. We wish you all the best, and thanks, and bye for now.